G'day and welcome to the Grow a Small Business Podcast. I'm your host, Troy Trewin. Each week, we speak with an owner who has grown a business with 5 to 30 team members to something bigger. Diving into their numbers and unearthing the pain they've experienced, we explore what they did to overcome each barrier and what they would do differently from day one. Let's get into it. Welcome everyone. Today I'm interviewing Tim Calise from Tim Calise Consulting and Investing based in Nashville, United States. Thanks for your time today, Tim.
Oh, great to be here, Troy. Thank you for having me.
We finally got here, how we know each other. You reached out about a year ago and here we are finally recording.
Yeah, it's sometimes it's a marathon, not a sprint. So getting all of our schedules to align, but glad we're here.
And tell our audience a bit about your business. You've got quite a storied business career. Well, that's the next question, how you started out, but maybe tell us a bit about what you're focusing on at the moment, business-wise.
Yeah, right now I call it functionally, there's three pieces to it. So the first is I am the acting president of a financial education company, helping individuals and entrepreneurs become better investors and understanding how an investor looks at a business or looks at investments in general. So we do live events as well as financial education. Call it my consistent opportunity for the last decade or so is a consultant and investor for my own capital and as a equity stake equity raiser for as a consultant. And last, as I sit as a independent director for a handful of other entrepreneurs who I get to act in the seat as proxy for them, as well as helping entrepreneurs run more efficient and hopefully more scalable businesses.
Yeah, I sit on 5 boards. I chair most of them. I really enjoy that role. It's obviously a very different angle of business as opposed to working in the business. And one of the things I really enjoy about those times is I like to describe a board to people as, intellectual piranhas ripping an issue apart, not attacking the person. And but the best thing for me is that the leader of the business then goes off and executes. We just brainstorm the best solution and off they go, and you don't have to get your hands dirty the day to day.
Yeah, spot on. That kind of consistent source of truth, wherever it comes from, is something that certainly excites me, and I know has been able to deliver value downstream to a number of the operating businesses.
And how did you start out?
So my story is I started out pretty young, actually. My father was in professional services, and as many young sons do, they mimic what they see around them. And so my father put on a suit and tie and took a briefcase and got on a train here. I grew up in New York, so in the Northeast, and went to work. And so as a middle school student, I didn't know anything else other than to bring a briefcase to school, which was the utter delight of my 2 sisters, who probably had wanted nothing to do with me once we got to school. But then my first official business was really in college, in university. And as the saying goes, necessity is the mother of invention. I went to school in Washington, D.C., and for those that are familiar with that city, a lot of the people who work inside of Washington, D.C. commute from Virginia or Maryland, from the outskirts. And so as a college student, there really wasn't a lot available from the hours of, say, 9 p.m. onwards. And so we created a late night snack delivery business for college students my sophomore year in college. And then my junior year, we created a textbook exchange program out of a response of spending $2,000 or so on textbooks and then handing them in at the end of the semester and getting $100 or $150 for them. We thought there was a better way. And then I moved into investment management, which I happened to go into, but spent a lot, kind of brought my entrepreneurial spirit to a number of endeavors over the last, say almost 2 decades at this point.
You'll maybe run us through some of those businesses if you can, maybe in order. Tell us the audience about them.
Yeah. So after I graduated from college, I knew I wanted to be in finance in some way, and I started actually at a division of Citibank. Solomon Smith Barney was the division for those that were around almost 20 years ago. I started there in retail brokerage, and I spent about 18 months there and realized that I didn't want to be a stockbroker, but I had the great fortune, 2 things of one, being exposed to other people, other clients that I was able to service. And number 2, I had a great mentor and boss at the time who said, you don't belong here, but let me help you find that next step that is a better fit for you. And that was actually joining a gentleman to launch a hedge fund in 2003. This was when hedge funds, alternative investments were starting to take hold. And from 2004 to 2007, I was able to raise over $350 million for that fund in advance of making a very difficult decision December 31st of 2007 to actually voluntarily and proactively give all of that capital back to our investors in what we saw to be a very challenging market climate to come. So that was kind of the first chapter, if you will, Troy. Like my professional career has very clear beginning and ends. That's the end of that chapter. And having worked basically for 4 years straight, ended up going back into something I love, which is fitness and health, and opened up a technology-driven fitness concept, which I built over about a decade from 2009 to 2019. And along the way was introduced to a company called Gym Launch, which was founded by a gentleman named Alex Hormozi and his wife, Layla, who people now probably know as acquisition.com. And I was able to become partners with Alex and Layla at Gym Launch, a business that grew from zero to $35 million a year in ARR in less than 2 years. And that business was sold to a private equity firm almost 3 years ago. And since then, I've been really focused on consulting, investing, kind of helping the next round of entrepreneurs see around the corners, identify those things that they might not see themselves, and hopefully stack the deck in their favor so they can be successful.
Yeah, that's great. I've read all of Alex's books, not just $100 million leads and offers, but also his first book, was it Gym Launch Secrets, which I thought was
Yep, Gym Launch Secrets.
Yeah, excellent
Yep.
book. Even if you don't own a gym, I've recommended that book to a lot of people. Just the way it goes into how to promote and market your business. I thought, and let alone run it operationally. I thought it's great. So, want to go back. You said you gave money back to the investors end of 2007. So this is before the GFC. It wasn't the GFC that kicked off that decision. What was it around that time that just made it really hard for you to deploy that capital?
Yeah. So our strategy was, for those that are unfamiliar with what a hedge fund is, it's like a mutual fund or a stock fund, but instead of only betting or hoping that stock prices will go up, you can also take positions where you can make money when stock prices come down. So you can play kind of both sides of the ledger, if you will. And so for us, our strategy was we would effectively, inside of, say, the airline industry, we would bet that one airline would go up and another airline would either stay stagnant or hopefully go down, and we would make money on the difference. And in 2007, some interesting things were starting to happen, which was stock prices. This interest rates were fairly low or very low at that time, and we were starting to see the beginning parts of the housing crisis starting to take hold. And the low interest rate environment really prevented a number of the companies that we were wanting to short or bet against effectively from actually coming down in stock price. They were just getting bid up and bid up. And so we couldn't make any money the way that we had originally done so for almost 4 years prior to that. And our whole value proposition was hitting singles each and every month. We committed to our investors we would make 1% to 1.5% a month like clockwork. We were never going to be up 10%, but we would never be down 10%. And when we weren't able to deploy our normal strategy, we had two choices. We either change our stripes and adapt and kind of go outside of what we believe to be the right thing, or we would go to our investors and say, things don't act, we're not in a quote unquote normal environment. We're going to take notice and play defense. And when we did that, which was in October of 2007, our investors said, we'd prefer to take our money and go deploy it elsewhere because others believe we can make money in this environment. And I still actually retain a number of those relationships now 20 years later who said I probably should have listened in some cases, or 15 years later, if you will. So
yeah, because I'm guessing that if you had have held on to that money, when the GFC hit about a year later, you would have lost a lot, if not most of that.
Yes. At that point, for those that were not investing at that time, it was, think of the old analogy of a whole crowd of people running for the exits. That's effectively what was happening, and you would just take any price you could get for anything that you owned at that time. And so it would have been blood in the streets for certain. And we deployed some level of leverage. So, we borrowed money on occasion. If we were in a position like that, it would have been catastrophic. And, I think the lesson I learned, and it's one that has carried me through, is number one, know what you're good at, know when you're going outside of your as I say, kind of over your skis. Once you're kind of outside of your comfort zone, that's something you should be aware of. Number two, do what's right, even if it hurts in the short term, because the business is a game of longevity. And the only thing that will take you down is if you are out of business. And if we had continued to go down that route, I would have lost every relationship I had at that point, and it would have been very difficult for me to kind of reestablish myself going forward.
And do you have some key numbers you can share to illustrate the growth of maybe pick one of the businesses?
Yeah, so I mean, the hedge fund business went from $700,000 under management, which is the key metric for that business, up to $349 million raised. We had about $450 million invested in 2007. In our fitness business, which we grew from startup to 8 locations, that was a zero to approximately $2.5 million US dollar annual run rate, annual revenue. And then Gym Launch was a zero to $35 million ascent. And one of the products that I worked with underneath the Gym Launch umbrella was a company called Allen, which Alex talks about in some of his content, which was a machine learning lead gen software. And that business we launched, Gym Launch itself was doing 35 million a year. We launched that business separately, and that went from zero to $1.6 million a month in recurring revenue in about 6 months.
That's
So
fantastic.
we've had some
Yeah.
great stories along the way, and quite frankly, running a very similar playbook. And once you know what works, many times it's just adapting some principles that you've learned that you've seen successful to other industries.
Yeah, Alex has talked a little bit about Alan through the books and the podcast, which I listen to religiously. But so Alan's not. It's maybe describe for the audience, because it's not just for gym businesses, is it?
Yeah. No, it's not. So the main idea was we were coaching or consulting for approximately 3,000 independent fitness facilities, primarily in North America, but we had some in Australia and some other folks in Western Europe. So the idea was gyms historically had been built off of a free trial or a low ticket offer. And so when Alex came in, what we pioneered was a high ticket short-term challenge format. So it was the 6-week, $600 challenge. And the idea was you align the price to be paid of the investment when the pain is the highest, right? So once we kind of broke the business model and we installed what we believe to be a better business, the next thing was, well, how do I get people to show up? And just for background, when we started in the early parts of Gym Launch, you could get a gym lead on Facebook for about 25 cents. And that might even be generous. So let's call it 2017, 2018. By 2019 and 2020, that price had gone from 25 cents to as much as $25.
Holy shit.
So when you are generating leads for 25 cents and only 1 out of 8 would actually show up in your facility, it's like, who's missing a 10-cent piece? Like, it just didn't matter at that point. But when they're $25 and you're getting $25 leads and $250 shows, you care a lot. And so we tried to teach gym owners how to work their leads more efficiently. And it was really tough. The model just didn't lend itself to it. So we built a product which, from the point of opt-in on a web form or a Facebook ad or something like that, all the way through to when somebody showed up for a sales appointment, we optimized that process, and we did all of that on our end. And we allowed our customer to pay only when the lead showed up for that sales appointment. So it's very efficient, low risk for the customer. Now, that took us to the beginning of part of Q1 of 2020. We were training our models to get a gym lead to walk in the door of a gym. Well, then COVID hit. And when COVID hit, it took us about 4 or 5 days to kind of train the model to move somebody from nurturing to an in-person appointment to nurturing to a Zoom call. And very shortly after, we said, okay, now we were able to get an internet-based lead to show up to a virtual sales consultation. We could do this for any high-ticket industry. So we did it for mattress stores, HVAC, dental, any high-ticket service. We were able to expand. We expanded into about 35 different industries after COVID hit.
That's fantastic. So that's a massive pivot, as they like to say, obviously, thanks to COVID.
Yes.
Yeah.
Yeah, we were very the gym business obviously got decimated depending on which numbers you read. Our experience was somewhere in the neighborhood of two-thirds of all gyms, either kind of long-term or permanently closed due to COVID. But Allen did benefit from some of those dynamic shifts, and it really proved out our model. But net net, it was a tough place to be. A lot of economic pain across the organization, but Allen unfortunately was able to take some advantage of that to swing the deck a little bit in our favor.
And what about number of full-time equivalent team members, maybe with the Allen business that you started with and where it's at now?
Yeah, so Allen, we've exited all of those businesses, so we've been out of those for almost 3 years now. We had a team of approximately 15 FTEs that ran that business. Some of them being on the technical side, and that does not include our development team. So we had about a 32-person development team. Those were and a lot of those were contractor based. So total team size was close to 40 in all, if you count the whole group. But throughout, what I like to do personally is I like to run really lean and efficient businesses personally. So I'll give you an example. Our first hedge fund, which just to give some economics, at $350 million, we would charge between 1% and 2% of our asset base just in a management fee each year. There were, call it, four and a half of us that ran that business. Really efficient business. It was a great business, high margin, high iteration, wasn't a big team size. You can't do that now with kind of the way that regulation here is in the United States for securities laws and things like that. But it was a great business. Our fitness business, we had 8 locations. We had approximately 25 to 30 FTEs at any one point. That was a very people-centric business. And my current role right now, which is Apex Coaching Group, which is the financial services business, we have approximately 6 FTEs generating just north of kind of a mid-7 figures number in sum total.
That's great. And what year did you start out in business and how old were you? Was that 2003?
I would have started my sophomore year in college, which was 2001, was the first business I officially started.
And how old were you then, 23 years ago?
So I would have been like 18, 19,
Yeah,
19.
great.
Yeah.
When was the
Yeah.
moment you felt like you had succeeded?
I still don't think I have. It's succeeded as a trigger word because it, to me, says something like mission accomplished. Now you can take your foot off the gas. Um, I'm constantly looking for problems to solve. I am not creative in the kind of traditional arts, interpretation of that word, but my creativity is the way to build the bridge between the problem and the promise, and the problem and the solution. And I don't think that will ever end. So success is just one of those. It's a different chapter onto a new adventure, and hopefully, like Ray Dalio in the book Principles, it's this kind of flywheel that, as I continue to move forward, hopefully the businesses get bigger, the revenues get bigger, the enjoyment gets bigger, quality of life improves, and things like that. That's really what I'm seeking.
Yeah, I love Ray's book Principles for the audience. If you haven't listened to it, I highly recommend it. Not just the content is just brilliant, but he's he's a New Yorker, isn't he? His accent is really captivating.
He is a born and raised New Yorker. Now lives in Connecticut, of probably many places, but yep, a Northeast guy.
Yeah, great book, and obviously a prolific investor himself. Yeah, really, really enjoyed that book. What does
Yeah.
success look like to you?
So for me, I'm a father of 3 kids. Been married for 17 years, together with my wife for over 20. We met in college. So for me, my metric that I'm looking at for myself is, from an output perspective, is dollars per hour. It's very easy to make more money when you work more. What I'm trying to do is find leverage points inside of the work that I do. And so that's something that I track on a quarterly basis right now, just to make sure I'm not kind of moving against those commitments that I've made to myself. Um, so I now live a life where I can do what I want with the people I want on the timelines that I want. And so I'm kind of happy from that perspective, satisfied, or what's the right, whatever, content in those ways. I'm above kind of Maslow's hierarchy of needs. Now I get to the best advice I ever got was stop thinking about what you want to do and start thinking about who you want to do it with. And when that shift changed, it went from an output kind of work idea to who do I partner with? Who do I want to be in business with? What problems do we want to solve and who needs to be like at the table? I had a 2 hour call this morning with a startup, four guys, three other people, um, you know, and I get to be a minority player on the team, but I have a very specific purpose and I love the guys. I've gotten to know them over the last couple of years. So that's a great engagement for me.
Yeah, it's a really good metric. I've had 30 business partners and 16 businesses now over 25 years in 3 countries. And some of them not nice people. And
Yeah.
it just, these days, I've got a rule, and particularly around my board work. The boards I sit on is no arsehole rule. Just don't want to work with people I don't like. I don't enjoy it. I really look forward to stepping into those board meetings for those challenging conversations. Yeah, I think you make a really good point there, Tim.
Spot on. Yeah, the no asshole rule is a good one. If you ever find yourself, it's Alex actually said something to me once, which I thought was really funny and interesting and reflective, which is if you're the first person I think of when I wake up or the last person I think of when I go to bed, and you're not my spouse, there's probably a problem. And that has actually guided me very, very well because when you lay down at night, you start right like going through the mental trash that you're processing, right?
Mm.
And those are usually those misalignments, and that's been one way that I've been able to kind of uncover when something doesn't feel right.
Yeah. Number one thing you'd recommend to marketing a fast growing business? You've obviously got experience with quite a few fast growing businesses. What's your thoughts on marketing?
Depending on size, under 1 million a year in revenue, let's just kind of define terms. My belief is in the early part of a business, the only thing you're trying to find is product market fit, which is defined as having somebody to buy and a product or service to sell them that intimately fits with what they want without kind of hemming it, without kind of forcing it, right? In order to do that, the number one metric that I recommend people focus on up until 1 million or so is the number of offers that you make every day. It is the only thing that matters because all you're doing is investigating different ways to kind of plug in your solution and adapt your solution to the audience. So that's the only thing that matters. That's not marketing. That's more direct response. So it would be, hey Troy, my name's Tim. I'm thinking about building something that helps podcast hosts be able to save hours of logistics, working with guests, and then getting all the content published out to every social channel. I'm thinking it's going to work like this. If I did something like that, would that actually help you? You might say yes. You might say no. You might say yes with some conditions. And I'm just learning. That's one of the best lessons I've ever learned at the startup phase. Above and beyond that, my personal belief is there's only 3 ways that you can buy to acquire a customer. There's organic channels or organic methods. There's paid methods, and there's joint ventures and partnerships. The fastest, most efficient way to do it is the third one. You should go out and find who has your customer and figure out a way to work with them on a basis that is net positive to each of you. Because what you are doing, what we need to do right now, which is the hardest thing we all face, is how do we build the know, like, and trust factor with our audience, with the people that we want to do business with. The best way to do that is, Troy, if you have a relationship with someone and you say, hey, Tim's the guy to go to, that's a transfer of trust that you have already built. It's incredibly difficult for me to do that from a standing start. So I recommend just about everybody work in some kind of joint venture, affiliate model of some kind, because it's also like fishing with a net instead of fishing with a fishing pole.
Yep, great. And you use Net Promoter Score in some of your businesses. Maybe do you want to talk about one of those and what the number was?
Yeah, we do. We do it in a bunch of different ways. I actually like surveying a lot. You know, whether it be a kind of a 0 to 10 scale or an NPS score. I just ran a 150-person event a couple of weeks ago, and for us, anything below a 9 average means we fail on a scale of 1 to 10. And the reason for that is we believe that we are premiumly priced and should be aspirational, and a 9 says that we're average in our world. So we set a 9.5 as a target. We hit 9.4, which I'm still reeling over. But I think surveying is one of the most underrated things. Conceptually, people know about it and they know to do it. They just don't do it. And in business, what I like to do, this might be my investor perspective coming out, which is I want to reduce my risk. And one way to reduce my risk of investing in my business is to know exactly what people want. And instead of guessing, I ask them. And very often they will actually lead you to the pockets of where value is that is uncovered. And there's some methods that we have that we've built to be able to do that systematically.
Yeah, I'm just so surprised at small businesses in particular that don't survey their customers. Most businesses or industries you can, and you just get so much intelligence from that. One, what you can change in the business. Two, there's a rich source of feedback for the team, particularly positive feedback. And you can pull testimonials out of those surveys as well. But Net Promoter Score is great. It's one question. I'll link through to a blog post I wrote on it 10 years ago in the show notes here. But what about funding? You've got quite extensive experience around funding. I'm assuming you've used pretty much every method of funding across your businesses. So maybe talk to the audience a little bit around funding.
Sure. Yes, I've done. We'll define kind of every version from uh, equity investing and raising equity capital, uh, any kind of debt financing, loans. I've raised money for debt funds and taken money from debt funds and things like that. That's just simply more kind of loan based. Um, I've done called safe notes, which here in the US is basically stands for a simple agreement for future equity. It was pioneered by the folks over at Y Combinator, which when you're starting out and you're raising capital or want to bring partners in, the question is, well, how do we value this thing? It's so early. You don't actually have to have that conversation and come to those terms on the front end. So I've done every version thereof. Um, I personally believe that small businesses in the beginning typically raise capital too soon. And the reason for that is because they believe that money is actually the solution to the problem, when really they're just avoiding doing the work of investigating, like I said, making offers, figuring it out in the beginning. And it also reflects one of the biggest problems that I've seen, and this comes from me making this mistake, which is I used to build things before I sold them. And in virtually every industry, you should sell before you build, because the only way to validate that you have a market is to take money. So if you're in a service business of any kind, short of basically, in the medical devices and biomed and things like that, anything that doesn't really, aviation and some of these others, like if you're a small business, you can validate what it is, even if you're building software. Build a wireframe version and say it's going to look kind of like this. If I do this, will you give me money for it? I think we underappreciate how far we can take a product. And psychologically, it's one of the biggest things that I recommend people do, because when somebody says no to an offer, they're saying no to the offer because it doesn't exist yet before you build it. If you built it and then you ask someone to buy and they say no, they're saying no to a manifestation of your hard work. And then you take it personally. And that's where a lot of entrepreneurs feel like they're hitting these roadblocks. So I actually want the no's, because the no is learning. It's not a no as a reflection of me. So I don't know if different capital sources are probably right for different things. My general recommendation is go as absolutely as far as you can to wring out as much of the risk as possible. Because as an investor, if there's more uncertainty, you're going to give up more your company to have me involved. If you said, listen, I've got 100 clients, I know they stay for 2 years. Here's what the price points look like, and I need money to pour fuel on the fire. That's very inexpensive capital.
Yeah, totally agree. Really.
Whereas I have a napkin with an idea on it. What do you think? You're going to have to give up a lot for that. right?
Yeah.
So
Great advice. And there's one funding option in America that I absolutely love that I came across a couple of years ago, the SBA loans, Small Business Administration. I don't know if you've had any experience with that, but I think that's just genius by the government. So for the audience, I think they'll guarantee, was it up to 70 or 80% of the loan to buy a business?
yeah, yeah, I've done four of these. My guarantees have always been 70%. So the way that it works is you work with a local bank. They're the ones who actually do the underwriting and they actually fund it and things like that. The U.S. government is simply a backstop, a guarantor
Yep.
against losses for the that the bank would suffer. So that's actually I funded my first two gym units was very much SBA backed. Yeah.
I just think that's brilliant. I think I came across it on John Morillow's podcast, Built to Sell Radio.
Mm,
Listened to all his books as well, which is genius. But because
yeah.
something like we had John on our cast and we were talking, I think it was something like 90% of businesses that are put on the market don't sell. So to have that mechanism, that funding mechanism for someone to be able to buy a business by the federal government in the US, I think is just genius because it's protecting jobs. Small businesses, as you know, in most developed nations, create the preponderance of jobs in those nations. So I
Yeah.
just wish Australia had something like that,
Yeah.
but not yet.
Yeah. Well, you bring up something very interesting, which is this is a question that I think about a lot, which is the buy versus build. There is I think, an unspoken, generally ego-driven approach to business, which is if you say I'm an entrepreneur, most people assume that means you took an idea from non-existent to existent, and that there's a badge of honor to say I manifested this thing successfully enough for it to stand on its own. I'll actually, and what you said is exactly right. 90% of businesses under $5 million a year in revenue do not sell or liquidate or are basically destined for liquidation. So if that's the case, then why take the 90% chance of loss when you can go out and just acquire a business? And let's just even say you have to pay twice as much to buy a business rather than what you would have what it would have cost to start it from scratch. I'll take a twice the price over here with a 90% reduction of risk. It
Yeah.
makes total sense. So I actually think more people should be thinking about buying a business that has existing cash flow. And then what you said is exactly right. The SBA in the United States here will actually back a lot of that cash flow if it already exists. So I think it's one of the most untapped areas that people generally miss.
Yeah, totally agree. And especially with now in the next decade, a lot of boomers want to retire. So there's a lot of great businesses out there that can be snapped up for a reasonable price. You can do vendor finance as well. So I do advise some people to actually look at that avenue rather than just trying to start something from scratch. Totally.
Yeah.
If you were to start up today with plenty of funding, would you go into your industry?
Uh, no, I would probably go into, well, if I define my industry as would I go acquire businesses and roll them up, and in what I basically do is effectively embed operational efficiency and product improvement, then yes, I would do that. I would not enter the startup world. I would be an acquisition machine more than I would a startup founder.
Can you outline the most stressful point in your small business growth journey so our audience can learn from it?
It is the idea that business ownership is uh, an easy ride. I think everybody understands is not the case. I have also yet to see any pitch deck from an investor that's asked for investment from me that has not had what we call an up and to the right, graph.
Hockey stick.
It's always going to be rosy,
Yeah.
right? It's a hockey stick. In my gym business, and I talk about this publicly, we expanded far too fast, and it was because I was in a place in my life where I was trying to prove to myself and others that I was worth investing in and could be successful at what I was trying to do. And the metric that I believed was the most important was revenue. So it meant something to me that time to say, I'm a seven-figure business owner. My business does $2 million a year, whatever it is. But we're making basically very little money off of that because I was running and scaling a very inefficient operation. And I was lying to myself, and I use that word purposely, that I would tell myself at the end of every quarter, well, we don't have any money left over because I'm reinvesting ahead of growth, which for me was just a call sign to you actually don't have any idea what you're doing.
Yep.
And it took me to a point. I remember it was 1:36 in the morning. I remember exactly where I was laying. I had a ceiling fan above my bed. My wife was laying next to me, and I was dripping sweat, wide awake, thinking to myself just the recurring thought of, if my family knew just how screwed we were, she'd probably leave me.
Mm.
It
Yep.
was just because I had just continued to go, and I was like, I'll figure it out, et cetera. And it was the wrong thing to do, but I was almost felt like I was so far in that I couldn't turn around. Um, and so it was a really tough place to be. So that was probably the most emotionally difficult thing to do. Returning all that capital after blood, sweat, and tears of crisscrossing the country and raising capital and all of that was probably the most economically painful thing I've ever done, because we effectively were walking away from a 10-figure business, or eight-figure business at that point, probably. Yeah.
And that 1:36 in the morning moment, how did you snap out of that hubris, overbearing pride or ego?
Um, it became very clear very quickly that uh, time was not going to be my friend. And there's a saying in other contexts, cut once, cut deep. The time was to effectively pay the piper and say, you know what, this is not going to work. Or I am not the person who can actually lead us out of this. And so we divested or closed three of those locations very quickly, which left us with five locations. Within another 12 months from there, we were down to three locations, and we actually made more money from three locations than we did from eight.
Yeah.
But it was hand to hand combat, literally and figuratively. Going to the landlord and saying, you know what, I can give you something now, or you can wait for nothing in 6 months.
Yeah.
Help me, it's hat in hand. And that is where it was probably the best thing that's ever happened to me, because it broke my ego. And it actually allowed me to be more honest with myself and others about what we were doing.
Yeah. Yeah, you mentioned before, most people know how hard small business is. Obviously, those that have stepped into that world, a lot of people don't. Have you heard of the rule of 4 by 2?
Oh, yes.
Yeah.
Yeah.
You're the only person that I've asked that knows this rule. I heard a VC when I was living in London say,
Yeah.
it's either going to take you 4 times as long, cost twice as much, or take
Yep. Or it'd
twice as
be
long. And
twice as much,
yeah,
twice as long.
yeah,
Yep.
that's it. Yeah.
Exactly. It's
What?
actually funny that if you very quickly take any investment, even if you write your own model, that is a great litmus test.
Yeah,
Assume it's going to take twice as long and it's going to cost twice as much. What would happen if that happens?
yeah,
Because that's actually probably closer to reality.
yeah,
Yeah,
totally.
spot on.
What area in business do you feel you've had to work on the most to add the greatest value?
Communication. I have what my mentor now has called, you have the curse of competence. And what that means for in the context was, he's like, you can do a lot of things, but if you ever want to do anything permanently or enjoy the journey, you have to figure out how to take all that stuff in your head and package it in a way that somebody else can align behind you. So uh, I have learned that I am only as good as the cadence in which and clarity in which I can communicate what is in my head to others. And it's actually become a daily practice now. So I write every morning to try to kind of work on that skill.
What have you enjoyed the least about managing fast growth?
To that same end, you can only move as quickly as the team can move. And one of my weak spots is, well, I should say, I had the great fortune of working alongside Layla Hormozi, who is probably the best COO, people systems person I have ever met in any context ever, including some very smart entrepreneurs, VCs, investors, et cetera. And so I know what it looks like now, what she was able to do. If she'll probably say she's an 8 out of 10, or probably even less with room to grow. I would be a 2 out of 10, maybe. So people systems is the hardest part for me, because I like to execute, move fast, and that doesn't always lend credence to team chemistry and all of the other kind of softer things. So I am an empath by every stretch of the imagination, but at the micro, not in the micro. Like in the moment, it's like, we got to move, we're going to move, here's what we're going to do. And that doesn't always go over so well.
What do you love most about growing a small business?
That it's an infinite game, meaning that there is legitimately as much territory as you want to own is available to you. And I think I was at an event that we hosted last week. I had 50 people in San Diego last week. Uh, Everyone there either has or has exited an 8-figure business. We had 6 people or so that have had 9-figure exits, and I had a publicly traded CEO, president in the room, $1 billion plus business. And we had a handful of guests. And their remark to me was, I have never been in a room like this, and it feels strange that all these super successful people are basically telling me everything that they can tell me about everything I ask. And so this scarcity mindset only exists at the lower levels. Once you get to a certain point, you will find that business is not a zero-sum game. For me to win, you don't have to lose. And if you can find yourself in a room that feels like it's a 1 + 1 = 7 type scenario, then you're probably in the right room. So the thing I enjoy the most is spending time with people like that, where there's infinite amounts of possibility out there. And I think that's what motivates me each day to continue to get myself into those rooms.
What has been the biggest mindset shift for you in your small business growth journey?
I love the book It's Who Not How, or some version thereof. My biggest mindset is, I grew up with the thinking that I had to be the smartest person in the room and I had to have all the answers. And my mind shift is, it actually has nothing to do with that. I need to have the self-awareness to know my zone of genius so I know what lane to stay in. And I have to have the awareness to go and find other people to supplement those areas of the business where that I need to build capability, not just capacity for myself.
Yeah, Who Not How, Dan Sullivan. I've actually just started listening to that book yesterday.
Yeah, great book.
The number one habit you think a small business owner needs to develop and maintain?
Focus. You can do anything, but you can't do everything.
Yep, if everything's a priority, nothing is.
Absolutely. And knowing, I think right now, one observation I've had with small business owners is they build what I'll call a disposable business, which is they'll pursue it only as far as it feels too difficult to continue forward, which is why you get these kind of every 6 months or every couple of years, you start a new thing. And where that comes from is, I talked to my father-in-law who restores classic cars and has a tractor and a farm and things like that. And he's had the same Bobcat for 40 years. And it's like, it was built well, I maintain it well, and it will last forever. Now you buy a lawnmower at a local garden store, it might last you a year or two, and you pay a fraction of the price because you just think to yourself, well, when it breaks, I'll just get a new one. I think we've shifted from this is a business, this is a pursuit, this is a commitment I'm going to make, and I'm going to maintain it, I'm going to build it well and things like that, to I'm going to build a business that's just good enough to serve me, and until it stops, and then I'll dispose of it, find a new one. And I think that is one thing that has set people back, probably more so than anything else I've seen recently.
Are you a small business owner? You know that getting recruitment right can make or break your team's success. Just one mishire can cost your business up to 27 times their salary. Finding and retaining top talent is a challenge, especially in today's competitive market. That's where our Ultimate Recruitment Toolkit comes in. Over 10 intensive days, our online course is designed specifically for small business owners like you. We'll walk you through the process of sourcing and securing A players for your team. Here's what you'll gain. Learn the proven strategies to pinpoint and attract the best talent in your industry. Access our comprehensive playbook filled with templates and tools tailored to fit your business needs, and apply the resources right away to enhance your recruitment process and streamline hiring. Invest in your business's success by helping your management team become effective recruiters. Supercharge your hiring process today with the Ultimate Recruitment Toolkit, available at growasmallbusiness.com. You talked how you've added people to the team, some wins, mistakes, and advice for those listening.
Dan Martell if you are not familiar with him, he wrote a book called Buy Back Your Time. He is a phenomenal coach and investor.
He's in
Um, he's had this,
SAS Academy.
yep, SaaS Academy, exactly right.
Started Clarity.fm as well.
That's exactly right.
Yep.
Yeah. Yeah. So Ben has a great backstory and things along those lines. But he said this phrase, which I believe he is attributed to him, and if not, I apologize. He said, "I can't work with you until I've worked with you." And what he means by so what he does is he gives every new quote unquote hire a project, and like we got to see how this works before we actually make long term commitments. And so I think if we adopted more of that mentality, we would actually do better. I also am a big believer personally in if a new hire, if new hire churn is high, meaning people leave inside of 6 months, that has nothing to do with them. It has everything to do with you.
Yep.
And so often we run into these finger pointing of other people instead of looking at ourselves.
Yeah, absolutely. Yes, small business owners in particular, I think they rush recruitment. They don't invest in professional development to become better recruiters, which is why we put together a two-week short course, the Ultimate Recruitment Toolkit, to help owners and their managers become better hiring managers. Because as you know, the chasm between an A and a B player is massive. Or if you get an arsehole on the team, there goes the culture.
Yeah. Yeah. Somebody said something once which I really like, which is your job as the business owner is to have a vision big enough for everyone to fit their dreams inside of. And I thought that was really good. It's like, huh, everyone on your team has a view for their life. And it is your job as the visionary, the leader, to set a vision where everyone else can realize their individual visions inside of yours. I thought that was really, really apt because I think often we sometimes err on the side of too small, or for us to win or for them to win, we have to lose. When you get into that really abundant mindset and dreaming bigger, and the 10x is bigger than 2 is easier than 2x concept, talking about Dan Sullivan, I think you find that there's a way to make both of those things happen.
What are some of the things you recommend to building a sustainable and kick-ass culture to help with the growth?
Learn to have hard conversations, which has been a struggle for me in the past. Pursue whatever truth means. It doesn't matter who comes up with it. Pursuit of truth, I think, is one of those really important things. And if you are a manager or a leader and you don't know what your direct reports, what they're trying to do with their life in the next 6 months, 12 months, 5 years, that's a good place to start. Because if you don't know that, then you're missing something.
Yeah, I love that Brene Brown quote, "Clear is kind."
Yeah. Yeah.
Tell
Spot on.
tell our audience how you've handled balance.
Uh, Probably poorly, but I'm not giving up. I think I do believe in kind of there are seasons where we go wrong, and this is an investor, lesson that I learned. You never turn a trade into an investment, meaning you don't ever say, "I'm going to do this short term," and then when it doesn't work out or something changes, you go, "Oh, I'll just keep with it." That is the recipe for disaster. So can you sprint at times where you need more resources and prioritize certain things? Absolutely. I'd be naive not to believe that to be true. But I think I have a great for those in the United States, you should look up Cary, Cary Jack, Jack. He runs a group called the Happy Hustle. And what he's done is basically systematically harmonize personal and professional well-being. And I just love everything he stands for because he actually has documented and demonstrated how having balance across the 8 or 10 areas of your life actually yields higher outcomes. So it's not just working harder and doing more. He's actually shown how having that balance is better for you and better for anybody that you're doing work with.
How much professional development have you invested in yourself?
Every available dollar outside of eating, sleeping, shelter, etc., as much as humanly possible. I believe it is one of the greatest unlocks. We pay for education with time or money. It's totally up to you which one you want. I would prefer to collapse, decades into days. I do as much as humanly possible. And the one evolution that I've had though is to go from generalist, like I just want to get in this room of entrepreneurs to, I want a very specific thing, which requires acknowledgement of what my bottleneck is today. So if right now it was, let's just say it's mindset, I would go and find a mindset coach specifically because that's the unlock for right now. In the future, it might be a business coach or a health coach or whatever it might be. Um, be really specific about what you need because you'll get more out of it faster. And I believe it's just how you stack leverage points along the way.
Now, you've mentioned you've had mentors or coaches along the way. Any other comments on that for the audience?
The longer you can sustain living below your means to reinvest in personal development, you are the best investment you can make. I see entrepreneurs all the time who are struggling, yet they've got, a brokerage account sitting, money sitting in cash. Uh, it's like you don't understand just how the opportunity cost that you're leaving on the table. And if you don't believe that you are your own best investment, you should hire someone to help you work through that because I believe that everybody should have that feeling.
Do you have a board of directors or advisors at the moment?
Absolutely. Every business I've been a part of, every business I've started, we always have a board. It generally starts as a board of advisors because I want perspective more than anything else. I don't have any current board of directors where there is, official, leverage or pieces to it. I just try to assemble the smartest people I can get to be able to help us optimize for success.
Now, Tim, you're one of the few we've had on that's exited a business. We've exited a few. Any advice for the audience listening about thinking of exiting one day?
Yes, you should take your business to market every year softly. And I'll give you my contact details, or you'll have it below this. Reach out to me. There's a process around this. I believe if you don't have options, if you don't know your options, you don't have any. And by the time you want to actually exit, you're already behind the curve. It's like drill the well before you're thirsty. Um, Exiting a business is a full-time job, and most people do it wrong. And in the balance of going through a sales process, they actually undermine the ability to actually exit because they take their eye off the ball, take their foot off the gas, et cetera, et cetera. So there's a process to it. You should plan on 12 to 24 months to exit the business properly.
Yep, great advice. All right, Tim, we're on to our final five questions. What do you think is the hardest thing in growing a small business?
Focus, staying in your lane, and hire to build capacity.
Favorite business book which has helped you the most?
I mentioned Buy Back Your Time by Dan Martell. Great book. Literally, it sits right next to me. Ready, Fire, Aim by Michael Masterson, also has pen name for Mark Ford. Great book. Has actually been one of the best books that I've implemented. Actionable. Great book. Yeah, Ready, Fire, Aim.
I haven't read that one yet, but I'm checking on my list right now.
Yeah.
Any great podcasts or online learning tools you use for your own professional development?
Love podcasts. My mentor, Sharon Srivatsa, the Business School podcast on every major platform. He was a former Goldman Sachs banker, has been in real estate for a while, took over a small retail brokerage in California, and had a $3.5 billion exit about 5, 6 years ago. Remarkable guy, great thinker, etc. Lewis Howes, School of Greatness, is another one that I listen to a lot. Um, and then for anybody who's in like the coaching consulting world, Dan Bolton is a great guy, primarily on YouTube. Um, and then I believe in writing. So Nicholas Cole wrote a book, something along the lines of The Art of Business Writing or something like that. The Art and Business of Online Writing. Great book because I believe communication and brand, loosely defined. Sharon, who I just mentioned, has this saying that fame is the most efficient business model. And I think Nicholas Cole's great book, The Art and Business of Online Writing, is one that shouldn't be missed.
One tool you'd recommend to help grow a small business?
We live in the world of AI. They are all available to you. At the very least, I would give you, or you should give your team the challenge to replace 50% of their output with some kind of uh, AI tool of some kind, whether it be something as simple as ChatGPT. It's remarkably powerful if you know what to do with it. whether it be Zapier, whether it be other things, use automation and systematization to your advantage.
Finally, my favorite question. What would you tell yourself on day one of starting out almost 24 years ago?
It's going to be okay. Make lots of offers, play the long game, build the biggest bench of people in your corner as you possibly can as soon as possible, and give without belief of reciprocity.
Thanks so much for your time today, Tim. I've been looking forward to this chat for a long time. Congratulations to you on your success in several businesses and obviously also working alongside Alex and Layla Hermosi, and really storied and varied business career. Really enjoyed our chat today. Thanks for coming on.
Thank you for having me.
And for our audience, we would greatly appreciate a review in iTunes or whatever platform you listen to us on. More reviews means we bubble up higher in iTunes, etc. So more business owners looking for podcast help with their growth will find us.